African Consolidated Resources, an emerging mid-tier multi-commodity company, presents the Pickstone Peerless Gold Project. Banded iron-hosted ore bodies such as Pickstone have been extensively mined in Australia, Canada and South Africa, and are a common host rock in Archean greenstone belts. It's not unusual for gold mineralisation to extend down to 2,000 metres, as at the Barberton mines in South Africa. In addition to a world-class mineral resource of 3.2 million ounces, the exploration potential at Pickstone for increased resources at depth is significant. The Pickstone Peerless Gold Project is located in Zimbabwe on the African continent in the Mashonaland West province, 120 kilometres southwest of the capital city, Harare. The deposit lies within the Archean Zimbabwe Craton, which in the 1970s was producing more gold than Western Australia. Before being separated in the Gondwana rifting event, the Zimbabwean greenstone belts were contiguous with the Yilgarn Craton of Western Australia, and they have world-class potential for gold, nickel and platinum. The Midlands Greenstone Belt, which hosts Pickstone Peerless, has produced over 23 million ounces of gold from over 300 mines. This gold project represents a JORC-compliant 3.2 million ounces of gold, grading at an average of 2.5 grams per tonne. Below a shallow oxide cap, sulfide mineralisation can be mined at a 5 grams per tonne gold head grade. In 1956, Lonhro started the mine and later sold it to Rio Tinto. Rio Tinto expanded the operation from 7,000 tonnes per month to 14,000 tonnes per month. In 1972, the operation was stopped due to difficult domestic economics, the prevailing country politics, and a low gold price of US $32 per ounce. The mine changed hands several times, and in 2004, African Consolidated Resources, also known as AFCR, acquired the mine. Since AFCR has owned the mine, it has invested in excess of $15 million in drilling, feasibility studies and mine development. This is a subset of the US $70 million the company has spent in exploration activities, mainly in Zimbabwe since its listing in 2006. The Pickstone mine was developed to 750 metres below surface by Rio Tinto and was accessed by 3 shafts along the Pickstone Shear. The Peerless Shear, lying 300 metres north of Pickstone, was accessed by 2 shafts and was trial mined down to only 90 metres below surface. The past mining activities clearly indicate the steeply dipping zones of mineralisation, whilst the current 3D modelling delineates the significant quantities of gold that have been left behind. The ore body is open at depth and along strike, which demonstrates the potential to further increase the gold resources. In December of 2012, the company released a preliminary economic assessment, a PEA, that indicated the presence of an open pittable resource containing more than 800,000 ounces of gold at an in-situ grade of 5.1 grams per tonne. Optimisations done during this study showed that a 50,000 tonne per month plant provided the most efficient return on capital. Most importantly, the ore body does not appear to break up significantly at higher cut-off grades. This gives the mine enormous flexibility to mine and stockpile at various cut-offs and react quickly to the prevailing economics of the day. In June of 2013, the company released 2 documents: a JORC-compliant resource statement which confirmed the original estimate from 2012 of 3.2 million ounces, and a definitive feasibility study, or DFS, on the Phase 1 mining of the oxide ore. SRK also signed off on this resource as an independent auditor in September 2013. The DFS clearly demonstrates the cash generative potential of the oxide ore, namely the ability to generate approximately $26 million US within the first 3 years of operation, and as much as $54 million US in 6 years. In November 2013, AFCR released a pre-feasibility study, a PFS, on a Phase 2 open pit, which mines oxide and sulfide ore to depths of 250 metres. The results of this pre-feasibility study are significant. A total mineral reserve has been declared of 16.6 million tonnes at 1.9 grams per tonne for 1.02 million ounces. The pit shell in total contains 1.4 million ounces of JORC resource, which has an excellent conversion rate of 75% to the reserve of 1.02 million ounces. Re-engineering of the production profile enables AFCR to realise a feed grade to the plant of 5.49 grams per tonne for a period of 8 years, producing 600,000 ounces. Thereafter, low-grade stockpiles may be processed for a further 10 years, producing a total of 766,000 ounces in the 18-year mine life. This makes the Pickstone Peerless Gold Project one of the premier mineable gold deposits in the world. The pre-feasibility stockpiling strategy delivers maximum cash flow margins in the first 8 years of mine life, whereafter low-grade stockpiles are processed at marginal cost. Annual cash flows peak at between $60 to $80 million per year from years 4 to 7. There are an additional 2 million ounces of underground resources lying beneath the PFS pit, and this ore is likely to come on stream in time to boost the low-grade stockpile mill feed. Research group Natural Resource Holdings produced a data set in 2012 indicating that of the 7,000 gold deposits and mines in their database, only 438 contained more than 1 million ounces. When compared in graphical format against these 438 deposits, the Pickstone Peerless project clearly is a world-class opportunity. The company has retained a highly experienced team of mining experts to develop and run the project. This is the company's flagship asset, and it represents our key vehicle in emerging from a successful explorer and developer into a production mining company. This asset alone has thrust the company into the lower end of the mid-tier gold space, and this will be exploited to firmly establish the company as a mid-tier multi-commodity miner. The Pickstone Peerless projects represent an exciting investment opportunity because it has significant competitive advantages, namely high-grade ore, long mine life, relatively short payback period, improving country politics relative to African peers, good geological address, significant potential to extend the life of the mine through exploration, and the opportunity to consolidate surrounding assets.